Happy Friday, everyone. It's 8:01 a.m. Chicago time on Friday, the 7th of July, 2023. This is episode number 2497. Looks like Wednesday will hit 2500, barring any sickness or anything. So thanks for joining me again to almost 500 episodes of this Trader Bite. It's been going a long time. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's take a look here really quick at the convergent trading pre-market summary sheet this morning. You have the market that is pretty mixed, really. The European markets are holding strong, and the U.S. markets had dipped overnight, but by the time the non-farm payrolls release came around, they were basically right back to the prior settlement or unchanged for the day. Or if you're a cool trader from the pit, you say the market is unched. Haven't heard that one in a long time. So that's what we have out of the U.S. pack. The Russell is strongest this morning, relatively strongest. But overall, they're all performing the same. The jobs report came in at 209,000 jobs created versus 225,000 jobs expected. The ADP had this effect a couple days ago of setting higher expectations for the markets. And it came in a little bit weaker. So, and also the prior was revised lower. Let me turn down my news feed here because I don't need it as much now that the release is out. The average hourly earnings came in higher. Canadian unemployment higher than expected. ECB's window says the labor market dynamics very positive in the Eurozone and elsewhere. Services inflation much more persistent. What happens to rates in September is an open question. You have the Bank of Japan, which is expected to hike but is holding steady. They're completely controlling their yield curve currently. What else is there? There's not much else really to talk about except that next week it's pretty busy. Next week we have a lot going on. Well, we start with Sunday night at 9:30 Eastern. We get the Chinese inflation rate. This one's important. And then on Tuesday, we get the ZOO number out of Germany. And then Wednesday, we have the inflation rates, the CPI and core inflation out of the US. And then Thursday, we have PPI. And then Friday, we have the prelim on Michigan sentiment. Also mixed in there is the Mannheim used car report. These are all inputs on prices for the Fed. The Fed is getting close. CPI, quite incredible. The CPI is moving in the right direction. It's expected to drop another 100 basis points next week from the prior, or something like maybe 50 basis points, 50 to 100 basis points from the prior. So the CPI is really moving towards that 2% figure that the Fed is mandated to manage. And employment is the big one. Employment is the one that's keeping things kind of tight for the Fed. Looking ahead, we have BOE's man speaking at 10:30. You have ECB's Lagarde at 12:45, and then we have the Baker Hughes rig count for oil at 1 o'clock, and that wraps up the day. The S&P this morning, looking at the gorilla in the room. The auction condition is multi-distribution this morning. It has checked multiple prices. There was a very large offer, single block offer of 3,000 contracts at yesterday's high around 44.51 that traded out this morning to splash up, to sweep up to 54, and then the market, and then the S&P has actually put in lower lows since. So it has closed its SOC at 44, 44.50. We'll look at that in a minute, but we're in a multi-distribution profile, which means that the auction is checking a lot of prices. There's discord or disagreement across the range, and we don't have consensus. It's not a balanced profile. Remember, the market is constantly looking to move towards balance. The volume is quite high, 305,000 contracts. You can see it turned blue on that sheet as I'm talking here because it exceeded what we would consider to be normal volume for this time of day. Over the last 252 sessions, it is unusual volume, greater than one standard deviation. We started to move into two standard deviations from the mode. So again, just like yesterday, there's a lot of interest and activity in the market, so we expect that to translate into some pretty decent opportunities like we expected yesterday and we saw yesterday, although the move down yesterday was such a grind. Inventory is only 55% short, much more balanced than yesterday's 100% short, and the range is quite a bit tighter. Yesterday was 41.5 or so, today 22.5, about half of that. The point of control is shifted down to 44, which is right at the SOC of the non-farm payrolls release. So that's where we are. Bitcoin pushed above 30 and is holding so far. That's another notable piece. Let's take a look at the actual market here. Here's where, well, let's look at expectations from yesterday. Let's look at this screen for a second. Well, look at that. That's just me demonstrating my kung fu skills there to the bottom left. I'm not sure what I was saying, but I was certainly using my arms to demonstrate it. But this is the S&P chart. Remember, we looked at how the delta was quite weak, and so the expectation is any push higher is likely to be refuted, and we expected it to push down. The number being 44.16 is what we talked about multiple times yesterday. 44.16 was the key target below. And I was making I was basically indicating here that it's very likely to chop on the open as it attempts to go higher and then starts to grind down. So this is what was expected yesterday. Here's what actually happened. Back here. Here's what actually happened. You have it opening and trying a little bit higher immediately on the open and then pushing down and using VWAP in mid pretty much the entire session until it crossed to the other side, and then that became support to squeeze down. This was a tough hold because it just would bounce up, squeeze down, bounce up, squeeze down. But the delta continued to be negative throughout the session until later on, and then it started to push higher. To me, I'm looking on the short side until we cross the mid here, mid pullback, and then we go neutral on the session. We have a neutral close yesterday. Neutral normal on the close yesterday, and so we ended up with a day that basically tested down. And where did it go? It went to 44, was it 44.19, something like that. 44.19 is where it went yesterday. So yeah, right down here, 44.19. What is the low of this bar? The low of this bar, 2075. Is that correct? Yeah, I guess 2075 is the number. So it didn't quite make it to the 16 that was expected, and then started rallying from there. So we ended up with a neutral normal day. When we go to the TPO chart, we note that it opened in the gap right here. The gap mid was 51, I believe, or something. No, 56, 50 something. But what I was looking for to the upside was 51.50 retest, if you recall from yesterday's trader bite. So it opened, ground itself down into the 20 right in here. So it closed the naked point of control here. It pushed right back to our point of control zone, which is 16. It's more like 19 actually with volume. With volume, it's 44.19, so it came pretty close. And then we rejected these prices, we refuted these prices and moved right back and closed and settled right there at 44.47, closing above the open. So the way it actually came down, tested Thursday's auction and came right back up and finished higher. Barring any news, this is relatively bullish. It didn't close in a neutral extreme high, it closed neutral, but it was able to cross the entire range, get back into the opening swing, take out the IB high, and close near the high of the range above the open. So what that looks like on a daily bar is a bit of a kind of a doji type bar, and is relatively bullish. But the overnight session made it so that it actually had no interest to the upside. So as we reopened, we opened lower. As we reopened, we went right to settlement, dipped down right after the European Open right here. It's actually right here. Dipped down right after the European Open, held the mid and VWAP right there, and then pushed up. And then we had the non-farm payrolls release right in here. So we had this wiggle, 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 wiggle. And then we had this 3,000 lot trade. It swept and then came right off. We went right back through the SOC, pulled right back to the settlement, and then we've made a new low. Pretty weak action. Pretty weak action there. It looked like it was likely to sweep that size on the offer today, the 3,000 lot block. It was a single block. I could see it on my Edge Pro X Dome. It looked like it would just continue and resume yesterday's rally and potentially start to work its way towards filling the gap. But since then, the biggest impulse of the day has been a down impulse. Let's turn this off. I don't know why it keeps coming back on. Has been a down impulse, and then since then it's kind of pushed back up. So we had a bit of an up impulse right back into this settlement, prior zipper resistance, and so on, and sideways. So this just doesn't look good. It doesn't look good. The volume's good. The range, overnight range is good. The action looks pretty bad, though, from an auction perspective. So what are we going to do? Take back all of that rallying, that grind up that we had yesterday and come back and revisit 44.19 and 16, or what? The fact is we are opening in the middle of the range. So if we look at it, here we are this morning compared to yesterday's range, we're opening right in the middle of the range. This looks to me like it's likely to be one of those summer non-farm payroll kind of sideways, absorb the information and just going sideways type of days. That's what this is kind of shaping up to be. So it's not looking so hot this morning. Also, if you notice yesterday's profile, multi-distribution profile, no real consensus. There's a pretty decent base. It built a pretty decent base against the Thursday profile, and it came right back down to this MC point of control area. So, it's all things are pointing to, a potential retest of that 65, and 71 area if it held the mid-century at 44.50, but it only went to 54 this morning, and now it's come all the way back and made new lows. And so to me, it's just it just doesn't look so hot today. It looks like it is probably there was a two-way battle yesterday. There was a two-way battle this morning in the dip, rally, push up, and then sell off. So to me, this looks like it'll be a two-way grind, more scalp-ish, less structured trades. Yesterday, the setups I took were, scalpish setups, although the trend was clearly down, just absolute garbage trading, losing day. Um, and to be honest with you, yesterday is a garbage day, not because the market didn't yield opportunities. It was a garbage day because I sucked. I just absolutely sucked. I was not so focused on the pullbacks to sell. Like we had great mid pullbacks, we had great VWAP pullbacks, we had good structure for pullbacks to sell on that morning grind. But reading the order flow yesterday and the way it was really having a hard time pushing lower and was refuted, it just looked to me like multiple short trap longs, and those are the low quality trades or setups that I saw, and so the results speak for themselves. Just absolute garbage. So what I'm saying there is I F that up. But the volatility and everything as expected with what the overnight session told us, we had good ranges, good rotations, good volume, but my head was not in the game, and so you pay the price. So that's how it is. Nobody wins every day. Anybody that tells you that they do is full of crap. And it's but you have to make sure you understand on those types of days. You have to make sure you understand why. Is it the market not yielding? Am I in that quadrant, not the quadrant of good process, positive results? You want to be in the quadrant of the upper quadrant. So there are four quadrants: good process, good result, positive results, good process, negative results. Those are two upper quadrants. Then you have poor process, positive results, and then you have poor process, negative results. And the worst quadrant to be in is poor process, positive results. That's where everybody starts. Stage one, the graveyard of poor process, positive result traders is overloaded. It looks more like a landfill, just mounds of traders piled up, dead accounts. You want to be in the upper quadrant, good process, and then whether it's positive or negative outcomes, that is not up to me. Yesterday, poor process, poor outcomes, and it's deserved. So you just need to stay in the take the high road there and stay in the good process end of things. It's just a fact. You let things slip, you get distracted, you don't focus. You look at the market and you're like, oh, this looks like a setup. You take it. That's not good process, and you should not be getting paid for that. So this is where we're set up today. Again, it looks to me like it is a market that is likely to cycle between settlement and point of control. Yesterday's point of control. So yesterday's point of control is right on top of settlement, and then the lower balance from yesterday occurred between 44.30 to about 44.22. There was a very clear fight at 44.30. So I'm expecting today to be between 44.30 and 44.47. That's where we're going to be playing today, and it's really looking scalpish to me. I may be wrong. I'm hoping I'm wrong, but that's how it looks. Everything indicated yesterday as we finished that we are likely to now tack. We finished checking the below. This moved down, and we finished strong. To me, this looked like I was more willing to bet that we would go to 65, 66, and 71 next. But I don't think the market has it in it right now. It seems really tired, and this non-farm payrolls release didn't give us that kind of a move. It popped higher, but it was refuted. So that's how things look right now here in the S&P for crude. It is a very, very, very tough grind higher. Crude just splashed down. It came right back up yesterday, and right now it's moving down. It's really struggling with the 72, as we have talked about. It's the crude ranges. The map is 70, 72, 74. Just a fight within that range. The Nasdaq, really nice. Really nice action. The Nasdaq looks a lot stronger than the S&P. Where's my profile here, Mr. Nasdaq? The profile from yesterday, the action in the Nasdaq overall looks much more favorable and much more in line with what we would expect in the auction. It is holding on to yesterday's upper range. So the Nasdaq ended up doing exactly what was expected, in that it extended the push higher. It continued to extend it higher, and it ended up going to 15,314. Remember, the Nasdaq yesterday was expected to test 15,100. It got to like 15,110. So it tested, it accomplished that test, and it finished quite strong, and it carried that forward in the overnight session and is holding on to the upper end of the range. So the Nasdaq and the S&P are disjointed a little bit. The S&P seeming relatively weaker than the NQ. So be careful if you use the ES to trade the NQ, or if you look at the NQ while trading the ES. The spread between these is not stable today. I don't have much more to say other than next Thursday, I'm doing a public AMA. I haven't done one in a long time. I used to do these on a bi-weekly basis or whatever. Just get on and answer questions, get into details. I have nothing to hide. I share setups, I share process, I share all these things. And we're going to have that next Thursday. I'll look for it on Monday. I'll post the link and all that. It's hosted by Convergent Trading. You can get more details and also get the pre-market summary sheet if you go to Twitter and follow Conv Trading, CONV Trading. You'll get more details there. I'll leave you with that. Good luck today, and I'll catch you on Monday. Just remember, the way we're shaping up this morning, it's likely to be a pretty choppy open. So be patient, at least for the first 15, 20 minutes. Let the market set up, and then start to assess your risk and jump in. Good luck, and I'll catch you later.